I cannot see a world in which this probabilistically does not play out. There is no way, and I've just done an interview about artificial intelligence, there is no way that this is not happening faster at a bigger scale than anything you've ever seen in your life before. And that's the same with robotics. That is the same with space travel. That is the same with the Internet of Things. That's the same with genetic sciences. It's the same with blockchain technology. I mean, these things are happening. They're not going to stop. There's nothing that will or can stop them. Oh, the Fed raised interest rates. The natural rate of interest rate's going to be higher at 4%. It's not going to stop. And these things are exponential. These things are doubling, quadrupling every year. I'm trying to get people to understand that I understand that you might fear it. I understand that you know of the world in terms of the things that you know. You know, the Federal Reserve bad, oil good, markets go up and down, boom equals bust, right? These things are so put into us that money printing equals inflation, narratives, that most of these are narratives. And I'm like, okay, you can either invest like the gold guys for a long time said the great inflation is coming and they bought gold. And they said quantitative easing, debasement of currency, gold. And they're going to confiscate your assets, gold. All of those things have happened. And gold is still nowhere in real terms. In fact, it's negative. In fact, gold mining stocks that have been every newsletter's tip for the last 40 years are all-time record lows in inflation-adjusted terms. So, but people have this belief, and I don't want people to miss an opportunity, because we can fear change or we can use it to help ourselves. You may fear AI. Christ, I do. But what am I going to do? Am I going to own gold or do I just buy AI? You know, this is a mindset that you have to go through.
So that you have to have that big picture, but this is where you can't get, we know not every company will make it, right? Like this is where it gets tricky because you can believe in the trend, but we know from the .com bust, some of them didn't get through, although now a company that pretty much does what they did, their just timing wasn't right or their revenue didn't come quick enough. So that you can believe the bigger narrative, but you have to be careful.
Okay, so what was the right answer is the answer I learned from crypto investment. You buy the massive sell-off. So I bought a whole basket of this exponential age stuff, not at the highs when I started talking about it, but after it was down 70%. Because I kind of have a rule of thumb. Anything down 70% or more that is not going bust, you should own. Particularly if it's part of a secular theme. So the trade's still not up. I think overall it's down about 15%. But, you know, I'm like down 30, don't really care because probably it's going to be up 10x. So, you know, it's the risk-adjusted reward is what you're looking for. You know, down 30%, up 10 times, you'll take that risk reward all day. Even if I'm wrong, let's discount me. Discount me by 50%, it's up 5 times. Okay, that's still an amazing bet. 3 times, it's still a 10x. So that's how I look at these things. And what I did was spread across a basket of different stuff. So even though I talk about ARK, people think I just own ARK. ARK is one of the positions that I have. I have a whole bunch of ETFs on robotics and all sorts of stuff, plus some single stocks like Reliance in India and a whole bunch of stuff to spread that risk out a bunch of names, because the point being, as you say, we don't really know. But I know probability is better if I buy the sell-off. That was the Bitcoin lesson. Also, as you say, we know the direction of travel, but we don't know which ones are going to travel there. So let's get some diversification. You set your time horizon, which is, okay, this is probably a 5 or 10 year bet and it's going to be volatile. Okay, so those are the parameters. It's pretty straightforward. And that all comes from the learning of stuff like what happened in Bitcoin, how to express the trade from the guy in Mallorca who's like, you see the trade is the best risk reward. Like I've always said, crypto has been is and will remain the best risk reward. But for equities, these are interesting too. And I just think it's intellectually important to participate in something so disruptive that even if it may not make as much money as you might make in crypto overall, I think it's just really important to be involved, because if not, I can see on Twitter, you'll drive yourself mad by rejecting it. Like, I remember Amazon, and I've talked about this in past. Amazon bookseller, great. Amazon Kindle, great. Love this, right? Now it's worth more than every other bookseller in the world added together. This is stupid. This is insanity. Trading at a P of 800. This is ridiculous. I'm a macro guy. This is the most ridiculous thing. I want to short it. Keeps going up. It's like Tesla. People have just gone through this whole experience with Tesla. It's like, because it wasn't a fucking bookseller. It was a network. Right. And once you understood it, wouldn't have made the mistakes. And it's that clarity. Once you get the trade, you stick with it, get the time horizon. Dan's an amazing thinker. He's really one of my really trusted go-to macro people. And he kept pestering me on Bitcoin. I'm like, yeah, I'm just not interested yet, because the price was falling and I didn't have anything to base an investment off. And we had no real thesis yet. Yes, the economy was slow, but there was no real understanding what was going to drive this. And anyway, I eventually get him on Real Vision, because I'm like, the only way to shut you up is to interview you publicly on Real Vision. So we have an amazing conversation. He completely opened my mind to things that I had not understood about Bitcoin and cryptocurrency overall. And my thesis was that the next recession, Bitcoin's going to be something. So I've been watching the price like a hawk, and it'd been wedging slowly in this triangle formation. And what I really love to see, and that reminds me, several times in the past I've traded it, is something that comes up, forms this wedge, and it kind of touches it once, down to the bottom once, up to the top once, down to the bottom once. It kind of goes up to the top once, and then it pulls back into the middle of the range, and then explodes higher. This little flag pattern is a really great pattern, and I was expecting this to be happening. And so March 2020, there it goes. It plummets right from that wedge, top of the wedge, straight into the middle of the range. I'm like, I have to buy it. And so I put in all available cash. Yeah, I had some other positions at the time. I had Eurodollar futures and I had some other stuff, gold and other stuff. But anyway, I bought it. I made a big thing of it. And that was at around 6,500. And it explodes higher. And it goes up to 68,000 and back down to where it is now. And I switched into ETH and made, that was a great call because it made a lot more money from it. And this bet in March was by far bigger than my original bet. Massively bigger. It's like I just put everything in, irresponsibly long.
Yeah, that's where the t-shirt comes from, right?
That's right. And so I'm like, okay, so I bought it really cheap. I sold it 10x. I then bought it again, but at a much higher price than I sold it, because I sold it at 2,500 and I bought it at 6,500 and maybe a bit up as well as it broke through 10,000. And now it's at 20,000. I thought nothing of that. I thought, yeah, I've done well. Look at me. I'm a good macro guy. I traded it, did all right, made money out of it. Not that many people have done well out of crypto like that. And then I went back and did the maths. And it only happened to me recently after I set up the Exponential Age, the digital asset management business. And I was writing for Macro Insiders as well, for Real Vision Pro. I thought, I want to know how I actually did compared to if I just held on to my original thesis. So I went back and looked, and I remember how much money I put into Bitcoin to start with, and it was a decent amount. It was a decent bet, but not massive, but, it was quite a big bet for me. And if I'd have just held that bloody position and not done anything, not any of the cute, I'm a macro hero, look at me, I can be Stan Druckenmiller, I would have made 5 times as much money. And here's the big learning, is I hadn't understood exponential trends, logarithmic trends, and adoption, Metcalfe's law, all of these things that subsequently came to me. And that tells you if a technology is about to be adopted at scale, then it doesn't revert back to the mean, it reverts back to this logarithmic channel, the bottom of that. And so you should buy, unless something completely changes your trade thesis, you should just buy at the bottom of the channel when it gets oversold. So I figured out if I just added the same amount every time as my original bet in the couple of times that it got to the bottom of the channel, I'd make 25 times my money.